how to differentiate between stop hunting and breaking a structure high or low. Now, why this is important? We have situations where we have a swing high and the price break this high. If we think that this is a break of structure high, because it looks like a break of structure high, and it means that we will assume automatically that after this high is being taken out, the next logical movement is price is going to do the rebalancing, right? To rebalancing to where? Let's say to this demand, right? So this, we see there's a demand here, and we'll be looking for a long here. But there are times when this break here is not a break of structure high, but instead it is actually a stop hunting, where we can see the price is likely to pull back and continue to start a downtrend. So now the question, of course, is how to differentiate this is a break of structure high, right, with this, whether it's a break of structure high or it is a stop hunting, right? Run for liquidity above this swing high. How can we know that, right? Because this is very important. If we know that this is a stop hunting, it means that we know that when the price starts pulling back, doing the rebalancing, which usually it will do that, then we are not going to buy at this area, right? We are looking for a price to pull back where there is a structure point over here. Let's say there's a breaker here, and we are going to look for sell opportunity if this is a stop hunting. So it is very important for us to differentiate. Now, is this a stop hunting or is this a break of structure high? So now there is one scenario where the price can potentially swing back up to the midpoint, okay, before continue to go lower, follow the higher time frame trend. This is one potential scenario. Okay, now what is the second scenario? The second scenario is price likely to continue to go lower. So these are the only two scenarios that the price can happen. Looking at this chart right here, does it tell us anything that the price is going back up? Is there any sign to tell us that the price is going to retrace back up to the midpoint, price equivalent? Is there anything to tell us? So my bias for the day is down. Okay, so now just now remember what I said. If we have a bearish day, which means that I want to above the open price. So this is the open price. Okay, so I'm going to wait for price to move higher to grab this stop loss, right, into this high. Then I go down to a lower time frame, look for confirmation entry, and then I'm going to sell here, move up higher above the New York. That's where we're going to take a sell. Then price eventually goes down and close below the open price. Okay, open price, the high, below, the close. So we want to sell somewhere above the open price. So that's how we can plan our trade based on the daily bias. So now I know that the current price is trade below open price, and I have a bullish bias. So having a bullish bias, I know that the price is likely to end up trade above this open price. Tonight's session is I have touched on a few, I think at least 3 points, which is very, very important.